Hey, what's up guys, John here. A new bill would force hedge funds to unload their entire home inventory, all of their single family rentals on the open market. To put this into context, there's about 750,000 properties owned by hedge funds, single family homes.
We've seen the rise of institutional investors in the single-family rental market.
In January, 33% of all homes purchased in the U.S. were bought by investors, often Wall Street-backed companies with multi-billion-dollar funds.
And there's presently about 750,000 active listings in America. So home inventory would nearly double. This would have a massive impact on property values, given the fact that interest rates are extremely high and there's very limited inventory. But if that does change, we're going to see a situation where sellers are going to be competing to get the attention of a very small pool of buyers. And a lot of these institutional investors that would be picking up these deals would be forced out of the market, which have a very, very big impact on price. I'm going to break down exactly what's going on, who's behind this, and what I think about this entire situation. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's going on in America's housing market. And if you'd like to fix your credit, we'd love to help you on my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, hedge funds have invaded the housing market. A new bill would ban them. A sweeping new bill introduced in Congress would essentially ban hedge funds and private equity firms from buying single-family homes. And this just came out. Hedge funds, private equity firms, and investment trusts have been snatching up single-family homes all around the country for years, creating concern that homeowners themselves would be pushed even further out of the market. But a sweeping new bill introduced by U.S. Senator Jeff Merkley and Washington Rep. Adam Smith would, if enacted as written, essentially ban such corporate investors from the practice moving forward. The bill, which was introduced in both the U.S. Senate and the U.S. House of Representatives on Thursday, would over a 10-year period require hedge funds and large institutional investors to completely divest, meaning sell, all of their single-family homes. Called the End Hedge Fund Control of American Homes Act, the bill would require large hedge funds to sell off 10% of their homes each year over a decade. So think about that. They'd be forced to sell 70,000 houses every single year, not list them, actually complete the sales on these properties. So you start to think about what this would mean. They'd have to price this inventory below market for them to be able to unload this amount of inventory. We shouldn't allow private equity firms to buy up vast quantities of American homes and create a generation of lifelong renters. Well, a couple thoughts on this. Lifelong renters. We've seen all of the conversations saying that, you're going to rent everything, and everyone's heard of this. We have to look at who are these people. Who are, Jeff Merkley and Adam Smith. So you look up Jeff Merkley, and Jeff Merkley, right here, all of his donors are listed. You're like, okay, he's got the National Association of Realtors and, some interesting, donors. But then you look at Adam Smith, and his number one donor is Microsoft. So you're like, okay, well, maybe, I don't know, maybe something's up there. We'll see. We'll see. Does Microsoft, being the number one donor, want to eliminate this? I'm not so sure. If this does pass, I think it will be an amazing thing. I think institutional investors, hedge funds, and very, very large pools of capital buying up, the cornerstone of the middle class, which is brick and mortar single family homes, those 3-bedroom, 2-bathroom homes. Home ownership is a very, very big part of building wealth. And when you have institutional investors that are raising money from insurance companies and, pension funds, and they have all this capital, and they get all of these subsidies and tax incentives to go up there and buy up all these single family homes. Of course, that's not a good thing for anybody except these hedge funds. But is this actually going to happen? It could. It very well could. But it would be pretty crazy for this actually to, to be forced. And the reason I think it would be crazy is it just doesn't seem, we live in a crazy world. Look at the last couple of years. Everything has been pretty insane. This is a very logical thing to do, to say, these large institutional investors should not be allowed to buy these single family homes. And I haven't seen anything logical take place over the last couple of years, especially when it comes to, combating inequality, as they would say, right? Inequality, this problem has only grown worse every single month over the last 36 to 40 months. Now look at this. The bill was introduced. Well, right here. We shouldn't allow these private equity firms to buy up vast quantities of American homes and create a generation of lifelong renters, Congress needs to act fast and help promote access to safe, affordable housing and homeownership for American families, not Wall Street, Smith said in a press release. The bill would require the IRS to tax large hedge funds that fail to sell off their single-family homes over the time frame. Now, you have a company like Blackstone. They raised a $30 billion real estate fund. And they're mainly focused on rental housing, hospitality, lab offices, data centers, logistics, right? But they have a really big focus on rental housing. Now, they raised this fund 6 months ago, right? So you're looking 7 months ago. You look at this and like, okay, well, they came out, MetLife Insurance, another entity, came out in February saying that institutional investors may control 40% of U.S. single-family rental homes in the next 6 years. So do I think this could happen? Anything is possible today. Anything is possible. But if this does happen, what I believe could happen is this would crash the housing market. And the reason for this is because there's such a small pool of home inventory on the market. If they started unloading inventory, it would be a situation with supply and demand. Supply and demand, supply would increase greatly. The demand would, continue to shrink because a lot of these institutional investors that are buying up these properties would pull back. How many buyers can afford to buy at 8% interest rates? Not that many, right? So we would see home prices go down. And if you are a renter right now and you're thinking about buying, it would be an incredible, incredible moment to go out there and invest to buy your first duplex, triplex, single family home, fourplex. I personally would go residential multifamily, 2 to 4 units for my first property. That's just me. It already has some support in the House where it is co-sponsored by the U.S. Representatives Nikema Williams and Linda Sanchez, as well as the Senate where it's co-sponsored by Senator Tina Smith, advocacy groups, Private Equity Shareholders Project, Consumer Action, National Consumer Law Protection, and offered additional support. The bill defines a hedge fund as partnerships, corporations, and real estate investment trusts that pools funds from institutions or from investors and have $50 million or more in net value of assets under management, while exemptions for nonprofits and companies primarily focused on construction. Hedge funds failing to report single-family home purchases would face up to a $20,000 fine that would go towards a housing down payment trust. Funds that fail to sell off housing stock in the time frame would require to face a tax of 50% of the fair market value of each property, with funds also going to the housing trust fund. Merkley and Smith cite data from the Urban Institute report that said in 2011, no single entity owned more than 1,000 single-family rental homes, whereas by June 2022, hedge funds and institutional investors own a combined 574,000 single-family homes. Now, these are the numbers that they're giving. But when you look at, right now there's 754,000 active listings in America, and they hedge funds, private equity groups, they own 238,000 rental homes, according to America for Financial Reform. But if you look at through MetLife Insurance, institutions own 700,000. So if you look at all the ways in which they categorize hedge funds, institutional investors, pools of capital, you probably own somewhere around 1 million homes, right? Somewhere around 1 million homes. So this would be an absolute game changer. This includes large corporate owners like Invitation Homes, which is founded by Blackstone, this company right here in 2009 during the Great Financial Crisis. They owned almost 80,000 homes themselves at that time, which owns more than 80,000 homes across the country. While corporate investors only own 5% of the nation's single-family housing stock, the ownership is often concentrated in majority Black and Latino neighborhoods, and in some neighborhoods, entire blocks have been purchased by investors. The practice has ramped up since the beginning of the pandemic, with 28% of these homes sold in 2022 going to institutional investors, including Pew Charitable Trust in 2021, venture funded company backed by Jeff Bezos and other billionaires also got in on the act. Institutional investors have also been buying up multifamily apartments, and tenants across the country have been fighting back. Now, they say right here that they go after Black and Latino neighborhoods. Now, a lot of the reason why they would do this is when you're an institutional investor, you're an investor as a whole, you're looking to buy deals with a couple things. One, you want densely populated areas. Two, you want to be near metro, you want to be near transit, you want to be near, a city hub, city centers. And three, you want to get a deal. You want to be able to buy a property at a low enough price point where, maybe the neighborhood's gentrifying. You can buy it at something called a discount to replacement value. So let's say, for example, the land's worth 200 grand and you're able to buy it for 250, right? Or 225,000 or 300,000. You're buying essentially the land And for an extra $50K, $100K, you get a structure. And that structure today might cost you $200,000 or $300,000 to actually build. So the investor's saying, hey, I'm buying something at a 50% discount to replacement cost, and I'm in a neighborhood and where rents are going to continue to increase, and there's a metro across the street. As this affordability crisis gets a lot worse, people are going to have to ditch the car. And because they're going to have to ditch the car, me having this rental right next to the train is going to give me pricing power. I'll be able to increase rents even further, right? So this is why they're going after these communities. And the suburban communities, are they going to go buy a home for $500,000, $600,000, $700,000? And they're going to have carrying costs. If they put 20% down on these deals, they're going to have carrying costs $3,000, $4,000 a month. I mean, probably not, right? When you factor in tax, insurance, and all their other expenses, probably not, right? They would probably prefer to go into a densely populated area where they have pricing power. And so I believe there's going to be some very, very interesting things coming down the road. Is this going to be one of them? Could we see a situation where hedge funds would be forced to dump these properties? If so, it would not surprise me if we start to see a lot of these, affordable housing trusts and a lot of these government entities coming out acquiring a lot of these assets. What do you think about this? Do you think this is something that would actually pass? Do you think this is a great thing for America? The other thing is pretty concerning is that they can just pass a bill and say these entities are now forced by law to sell everything. What are the odds that they couldn't just pass a bill to do the same thing to everyday Americans, right? In a different way. You just never know. What do you think about all this? Drop below, let's have a conversation. If you'd like to fix your credit to position yourself what I believe is going to be the greatest wealth transfer in American history, we're in it now. It started in 2020. It's been ramping up over the last couple of years. The next 2 to 3 years, it's going to be unbelievable. If you're a renter right now and you're thinking about buying your first deal, you're going to want exceptional credit. You're going to want to put yourself in a really, really strong position financially. Get out of high interest rate consumer credit card debt. If you have some high interest rate consumer credit card debt, if you have a good credit score, you can do something called a balance transfer in most cases, where you can transfer a high interest credit card balance to a 0% intro card for 12 to 24 months, no interest. You can get out of debt a lot faster. So if you need help fixing your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description, just as well as video. Schedule a free strategy session. Catch you in the next one.